Hello students, my name is Shesi George, your professional accounting teacher. Okay. In this video, we are going to look at the concept of accounting equation. Let me start this way. Supposing we have Mr. George. This is Mr. George. Okay. He wants to invest into a business. Then this is a line, a boundary line separating Mr. George from the business. This is the business. Mr. George is a natural person. Of course, the business is an artificial person. This is the business. Okay. All right. Now, when Mr. George decides to invest into the business, he decides to invest 50,000 naira to set up his business. All right. It means that the business will own cash of how much? 50,000 naira. Okay. And at the same time, because Mr. George is separated from the business, that's what we call the business entity concept. Okay, the business also owes. The business owns cash, 50,000. Also own Mr. George. All right, 50,000 naira at every point in time. The business is having cash. The cash invested into the business, which is 50,000. The business owes Mr. George 50,000. Take note of that. So that is the first scenario. The second scenario is that Mr. George, the business now, we now said the business now, decide to buy motor van from here. So when you buy motor van from this 50,000, okay, let's say 30,000 motor van, all right, then what remains here? The business we hold, so this one is gone. The business owns now motor van of 30,000. Don't forget, the business was having 50,000. So if the business removed 30,000 to buy motor van now, the business cash will remain how much? 20,000. Good. Then the total still maintains 50,000. The total. Then don't forget, the business owes Mr. George owes Mr. George the 50,000. Okay, so that at every point in time the status quo will be maintained. All right. Now let's take for example Mr. George. The business. Don't forget, decide to take loan from say UBA of let's say 15,000 cash. So it means the cash will be added to the existing 20,000. All right. So in this case, in this scenario now, the business owns what? Motor van. Still 30,000. The value is still 30,000. Now, if you look at the cash that is collected from the third party, say Mr. Olu, the cash was borrowed from Mr. Olu. Mr. Olu lent us 15,000. All right. Now the cash the business has now will be 35,000. Okay. When you add 20 plus 15, it will give you 35. Then when you add the total here, we have 65,000. All right. Don't forget, the business still owes. The business owes, number one, Mr. George. How much? 50,000. Then the business also owes Mr. Olu. How much? 15,000. So that at every point in time, we have 65,000 naira. All right. Now, these items that is owned by the business, they are called assets. Okay, this is Mr. George because he is the assumed owner of the business. He's the one that started the business. He's the one that registered the existence of the business. Mr. George will be referred to as capital in this regard. Okay. Mr. Olu is a third party. He's not the owner of the business, of course, but the business owes Mr. Olu a debt of 15,000. Okay, so it will be regarded as liability. Okay, so when you add the capital plus liability together, it will give you what? Asset, which form the basis of our accounting equation that says that assets equals to capital plus liability. Okay, so this is the accounting equation. So what is accounting equation, friends? Accounting equation is nothing but an equation that shows the relationship between assets, capital, and liability of a business, and which form the basis. So the accounting equation form the basis of preparation of the books of accounts. So accounting, that's accounting equation. All right. So in the next video, I'm going to bring a question concerning this, how to apply this. So don't forget, we have asset equals to capital plus liability. Sometimes we may make any of these variable a subject of formula. We can say that if A equals to capital plus liability, what is C? C will be asset minus liability. L will be asset minus capital. So this is, but where there is no liability, asset will be equals to what? Capital at every point in time, when the liability is 0. Okay, so what is liability? Liability means indebtedness of the business. That's indebtedness of the business. Assets, they are the properties like this. Now, these are the properties of the business. That they are properties owned by the business. Then capital is the amount invested into the business, and it is also called the equity. That is what belongs to the owner, to the shareholder. All right, so capital is what belongs to the shareholder. Okay, so if you like this video, please do share with your friends. All right, please share and subscribe to my YouTube channel, GTC. Thanks for watching. God bless. Bye.